Hi there everyone, good evening and welcome to the Money Show. Today it's the real estate special and we're going to answer all your real estate related questions, whether or not this is a safe area to invest in, how much of your portfolio you should be investing in, what are the changes that are required within the real estate space, what are the tax implications, what should home buyers do. All of that will be answered today on the show, and remember you can send in your queries on the Money Show at etnow.tv. Let's bring on board then our expert who will be joining in over the next half hour. We have Prashant Thakur, Head Research at ANAROCK Property, now joining in on the show. Good evening, Prashant, and great to have you with us. You know, all of us know someone who's made a mini fortune investing in a flat or investing in a residential property at the right time, but there's so many ups and downs in the markets, and I think there's that deep-rooted sense among Indian investors that the residential property market is a surefire investment opportunity, excellent returns, and you know that wisdom has been passed on from generation to generation. But there is no doubt that of late we've seen a lot of volatility in the real estate prices. So let's get down to basics. What is the outlook that you have on real estate prices across India? And do you think that as a safe bet, is real estate really the right option?
Yeah, you rightly said that of late real estate has been going through a lot of turmoil. But if you look at the whole housing scenario in India, India has natural demand for housing. So though of late we have seen a lot of price stagnation across the market, one good thing that has happened in real estate sector is we are going through a fundamental structural change in the form of RERA and GST that have been effectively implemented. So that is bringing a lot of positivity around the industry, and that is bringing a lot of transparency in this industry. Having said that, that is also bringing a lot of confidence back in the industry. So though we might see a very slow price appreciation in near term, in fact in the last 8-9 quarters we haven't seen much of price appreciation. In fact, few markets like NCR and Chennai, we saw price coming down by 2 to 3%. But in next couple of quarters we see prices firming up by 3 to 5%. And in long term, if I have to talk about another 5 years where we see the dust around RERA and GST settling down, you might expect a price appreciation of close to 5 to 10%. So that's a healthy long term return if you have an appetite to stay invested in long term in this sector.
Okay. So let's just get right back to that point with respect to the real estate market right now, and you're really in the thick of things, so you'll be able to give us a pulse. There has been a lull in real estate as you just spoke about. There's been rising interest rates, there's high maintenance costs, there's tax on rentals, capital gains. So with all of those worries, how lucrative is it right now for one to put, say, a significant chunk of their investments or their savings, if you will, into the real estate market? I only ask this because it's been described, 2018 being, dead for the real estate sector as a whole. So if you just want to bust those myths and give us a little sense of what the on-ground situation is like.
As I said earlier, that you need to take a long-term approach. Again, having said that, if you are an end user, this is the best time for you to buy the property because you have a lot of options to choose from, and price points are quite low. But again, if you consider real estate as an asset class in your portfolio, it lends a lot of stability to your portfolio. So in my opinion, it should definitely have a major share in your portfolio. It should be in the range of 15 to 20%. And if we look at the historical return that real estate as an asset class has given over a period of 10 years, that considering all the ups and downs that we have seen, it has been close to 15 to 16%, which is a phenomenal return that we have seen. And as an asset class, it definitely gives as I said, a kind of a sense of stability and certainty in your portfolio. And where you see a lot of noise around the prices coming down, in my opinion, it's kind of the industry is re-rating itself. It has definitely upsides for long-term investors, and it has definitely lucrative buying opportunities for immediate end users who are kind of waiting and have been waiting quite long for making the right purchase. So with interest rate going up and you know the prices are at rock bottom, developers are willing to sit across the table and give you lucrative deals, I think this is the right time for the end user to buy and a long-term investor to take a very fundamental judgmental call based on the prices that he wants to enter at.
Okay, so if you're a long-term end user with respect to the vision of investing in real estate, now is the right time, says Prashant. Well, we're inviting all of your questions and queries on real estate. If you have any, email us on themoneyshow@etnow.tv. Our first email query comes in from Bhaskar. He says, I have invested in different asset classes in my portfolio like equity markets, bonds, and I would now like to know whether it's the right time to purchase property in Mumbai. I wish to sell it after a long time for profit. So this is pretty much in tandem with what you were talking about. Let's talk specifically about the Mumbai market. What's the situation right now? I think he's purely looking at this from an investment standpoint. What advice would you have for Bhaskar?
So, first of all, Mumbai is kind of significantly upgrading itself. If you look out, you know, at the infrastructure upgrade that is happening across, the kind of office activities that we are seeing is phenomenal. So we are set for you know a long term good amount of price appreciation in long term. And if I look at his investment horizon, I think it is in tandem with what I've been talking about. If you're a long term investor, if you can invest in you know a good asset class for another 5 to 10 years, I think Mumbai would definitely give you the required return.
Okay, that's the outlook coming in with respect to investing in Mumbai. Currently, the scenario looks fairly lucrative. You can look to put in your money here and look at a long-term time horizon of the next 8 to 10 months. There's been a lot of infrastructure upgradation. Yes, we're seeing that currently, of course, in the city right now. Well, we have another viewer query then, and this one's been sent in to us by Nandita. She says, I live in Mumbai and I'm 35 years old. I wish to invest in real estate, but I can't afford the exorbitant prices in Mumbai. So does it make sense to invest in property in another city? She asks, what are the factors or the tax implications that I should keep in mind? I think this is a fairly valid question. We have seen, you know, prices go through the roof as well in Mumbai city. A lot of people can't afford this as an investment opportunity. So is it a danger to put your money in other markets? What are the factors that one really needs to keep in mind? And share with us which are the other markets that seem lucrative from an investment standpoint for real estate, Prashant.
So first of all, you know, it's not at all dangerous to put your money in other cities, provided you make a right selection in terms of the developer whom you're choosing to buy property from, and definitely the location of the property. Again, having said that, there are certain cities, and you know, specifically to name Hyderabad, Pune, and few micro markets of Bangalore, where prices are still affordable. So if you have to talk about you know micro markets like Gachibowli, high-tech city of Hyderabad, you know you have good properties at attractive price point of 45 to 60 lakhs, and that's the reason we are seeing a lot of traction still in Hyderabad market. And apart from that, we have Bangalore, which is predominantly IT-driven economy. We have seen robust activity in terms of buying and selling, developers launching new projects at a very attractive price point. So if you're looking to invest somewhere in the range of 65 to let's say 75 lakhs for a 2 BHK, I think Bangalore, Hyderabad and Pune would definitely be the cities you should look at. And apart from this, if you look at the peripheries of Mumbai, for example, Navi Mumbai has good amount of properties available at a price point which is quite attractive compared to Mumbai, and there would be no tax implication as say because you know when it comes to real estate, it's almost uniform across country, and the only catch is that you know when you buy a property. Again, I would insist that you should do your due diligence, especially if you are doing in a city where you have not lived. You should do a due diligence on developer, the project, his past reputation, and also the micro market. What are the infrastructure in place, and what are the socio-economic factor of that particular micro market, and go ahead and make that purchase.
All right, that's the outlook coming in. It's absolutely no danger if you can't afford Mumbai city. There's lots of lucrative markets. You know, he's flagged off some particular areas as well that you can invest in Pune, Bengaluru, Hyderabad. All of this have strong real estate investment opportunities for you. Tell you what, let's take a quick break. Stay with us on the other side. Prashant Thakur of ANAROCK Property will continue to be with us, guide us as to what you should do when it comes to real estate investments. If you have any questions, email us on The Money Show at etnow.tv. Welcome back. This is The Money Show. Today it's the real estate special. We're answering all your questions with respect to investments in real estate. If you're a stuck home buyer, what should be your legal rights? If you're looking to invest currently in the property markets, is it a good time or not? And clearing the air is Prashant Thakur, Head Research at ANAROCK Property. Well, we have a whole host of other email questions that have been sent in to us on The Money Show at etnow.tv. So let's address Jeetu's query. He asks quite a valid question. He says, what is the impact of RERA? How will it benefit me as a buyer, especially in the case of project delays by the builder? And I'm glad, Prashant, that he brought this up because, you know, we have, of course, heard about what a game-changing reform RERA really is. But I think on ground, it's actually going to take, multiple years for the significant impact to actually be felt. I think only a few states as of now have implemented RERA effectively. So what exactly will be your view on how effective it's been so far, what the road ahead is, and how you would like to answer Jeetu's question?
So first of all, RERA has brought in kind of financial as well as operational discipline in this industry. Now, the buyer is aware what he is buying in and when the expected possession will have, because RERA mandates a developer that, until unless he has not got all the government approvals and he has not received a RERA registration number from RERA authority, he cannot even market the project. And he has to kind of disclose all the details of his project. For example, let's say what would be the design, what would be the the floor area, all the approvals that he has in place, and he has to mention the price on carpet area. So in a sense, the buyer is more clear what he is getting into. Now, also earlier, we have been seeing any issues where the projects were getting delayed for indefinite amount of time. Now, RERA has mandated developer that he cannot, let's say he has to keep 70% of the money in a separate account, and that can be used only for that particular project. So there's no kind of moving of money from one project to other, and then ensure that the timely completion of the project happens. So two things now the buyer will be aware what he is buying and when he is getting the possession. Having said that, if there is kind of any delay in the timelines, now he has a very credible and formal platform to address his grievances in the form of RERA. Earlier he used to kind of, he was only left at the mercy of consumer courts, which used to take ages of its own sweet time to get the resolution done. Now, for example, let's say as a buyer, if I have any grievance against the developer related to misinformation or let's say delayed possession, I can approach RERA and file my complaint either by visiting the office or by making the complaint online, and it has to be heard within 60 days from the date I have mentioned filed my complaint. Now again, having said that, what are the reforms as a whole this industry needs? So RERA and GST have been really a game changer, but what needs to be further done is that, on one hand, RERA has really disciplined the developers, and they are now mandated to complete the projects in a stipulated amount of time. So there's a lot of pressure on them to complete the project on time and within a budget. But if you don't provide them facilities like single clearance window, their intention of completing the project on time gets impacted. So first of all, I think this is the right time for all the authorities to think seriously towards providing single clearance window, which kind of facilitates the developer in meeting its timeline. Because if given a fair chance, none of the developers would want to delay the project in this strict scenario. The second point, which I think would be a slight reduction in GST, because if you look at the GST rate, which is close to 12%, and then if you add up the stamp duty and registration charge, the transaction cost of real estate is one of the highest in the world. So these are the broad reforms I think needs to be further done, in my opinion, to take the development work that has been done to next level.
All right, that's the take on RERA, and an immediate redressal mechanism is what it really is. But just to take that question forward, and a topic that I'd like to discuss is that, so you're saying that, we have many cases and we keep getting questions of home buyers that are stuck. They haven't received their property ownership. They are not getting any responses, from the property managers, etc., from the owners. What exactly should they be doing in that case?
So as a first step, they should approach RERA. Either file the complaint online, and the RERA would look into the complaint file, do their own investigation, and pass a judgment. Now, having said that, if the judgment is not up to the satisfactory level of the complaint, he can approach the RERA appellate tribunal within 60 days, and the further investigation is done, and if he is not even satisfied by the tribunal's ruling, the person can approach the state high court within 80 days of the ruling. So I think there's layer of series of safety net that has been provided to the home buyers in this new act. Earlier he was left at the mercy of consumer court, but now he has step-by-step process to address his grievance.
Okay, Prashant, just to talk a little bit more about, the scenario within the real estate space as a whole, no doubt RERA has definitely been quite a path-breaking reform, as you spoke about. It really addresses a lot of the, grievances from, a lot of the investors, but a lot more is required, because there were a lot of speed bumps as well. Demonetization really threw things out of whack to a great extent. So for the real estate sector, I just want to understand, what are the other reforms? What is it that is required, or what is it that is desired for it to realize its full potential?
So if we have to look at a few road bumps which is kind of plaguing this industry from the industry point of view, I would say is a lot more clarity needs to be given in terms of input tax credit. Right now there's a lot of confusion in the minds of developer as well as the buyer, which is kind of hindering the sales of new projects. Now let's say for a developer to pass on the input tax benefit to his end users, he needs all the vendors which are working for him to be GST compliant, but we all know that most of the vendors who work for developers, not all of them are GST compliant right now. So there needs to be more of clarity and simplification of input tax credit, how it is calculated and how it should be passed on. This is number one. And as I mentioned earlier, that the GST rates needs to be rationalized for real estate, because already the transactions are not happening because of perceived high prices in the market, and the transaction costs are quite high. And the infrastructure upgrade for the RERA authority itself. So now almost 27 states have notified RERA, and most of them have their website right now. But most of the websites are not fully functional. Now, for example, let's say if I as developer want to update my quarterly progress report on the website, most of the portals except MahaRERA website does not allows me to do that. So there's a lot of operational upgrade that requires from RERA itself to kind of facilitate the entire plethora of regulatory aspect that is being looked into. So this is something I would like to highlight: infrastructure upgrade from the RERA website, a simplification of input tax credit calculation and how it is passed on, and rationalization of GST rates for real estate.
Okay, so quite a few things that are still on the wish list when it comes to making the real estate sector more lucrative, more transparent, and a better investment avenue, if you will. But I'm afraid we're completely out of time. So Prashant, on that note, we'll let you go. Thanks so much for joining in. And remember, if you have any real estate related queries, every Thursday is when we take it on board. Email us on The Money Show at etnow.tv. For now, it's a wrap. Thanks for watching.